G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. The charts are showing consolidation for both, but there's still overall bearish momentum. We're going to include some back testing, so make sure you hit the like and subscribe button to support the channel. As of today, April 22nd, the German DAX, despite a sluggish domestic economy with projected GDP growth of only 0.8% for 2025, the DAX has risen approximately 18.7% year to date, driven by strong performances from key companies like SAP, Rheinmetall and Siemens Energy. The export-oriented nature of these firms, coupled with a weaker euro, has bolstered international revenues, offsetting domestic challenges. However, the index's heavy reliance on a few major players raises concerns about sustainability, especially if these companies face headwinds. For the Nikkei, 2225 has experienced volatility influenced by global tech sector fluctuations and concerns over US economic policies. While technological advancements and potential policy support from the Bank of Japan offer upside potential, forecasts suggest the index may decline around 30,075 by year end. Investors are advised to monitor global economic indicators and domestic policy shifts closely, as these will significantly impact market dynamics. So first, looking at the German DAX, we look at the long-term trends on the monthly. The price is still above the moving averages, giving us a bullish momentum. The CCI 150 was above its respective moving averages, but notice it's broken into that moving average range, giving us a somewhat neutral positioning. So just be cautious about going long, and that's further proven here by the weekly and the daily. The weekly here, we did have a bearish divergence. If I zoom in for a moment, we had lower or a double top almost on the CCI versus higher highs on the price. That actually broke down, hit our 23-38% Fibonacci range, and that would have been drawn. So draw it again, take it back to the significant low before that divergence started. That's at 23-38% range. You'll see here that candle, actually the wick of that broke down past the 50% level, but then it bounced up, and currently it's sitting around the 23% range. But notice the CCI is still dropping, so that's a weakening sign on the weekly. On the daily, we had another bearish divergence here, and also we've got this CCI 1500, which is our new indicator. Go to the +1 video series to learn how to draw that. But basically, we had a bearish divergence here, and that was just confirmed by that return to the downside. And then that CCI 1500 started turning negative. But also notice back here, we had the CCI still dropping, the CCI 150, and the price dropped below the moving averages. Now, it's made a bit of a retrace into that moving average range on the price, but it's broken above, and then it's currently in that range again on the CCI 150. So I would avoid going long. It's more to the downside as per this indicator here. If we go to the intraday chart, the 1 hour chart, you can see here since our last update, the price has pretty much been consolidating sideways, had a bit of a rise, but nothing too dramatic, as indicated by that little rise on the daily. But according to this indicator here, the CCI 1500 is predominantly short trades. So first, let's look at the long trades, how you've been trading this period back here, the long positions. If we go to the back test, we look at the long trades, and that's where I got the stop loss approach and the average down approach beginning there around the 7th or 8th of January 2025. So you can see here the stop loss approach has generated those positives mostly. Likewise, the average down approach is a bit hard to read that profitability, but I'll explain what you would have gained so far. And ideally, you would have closed out your positions at the very latest by when it started turning down. Now notice here, ideally, you want to stop your positions going long when you see a bearish divergence like it was back here. And that confirmed by a break to the downside on the CCI, but also the price broke below the moving averages. So that would have been probably an ideal spot to get out of your trades. And that was very close to this CCI 1500 turning red as well. Now, if you did that, that was around this period back here. You can see there the stop loss approach, the top chart here, around that point. You would have lost a bit of profitability. That generated about 375. And the average down approach generated about, say, 14,000 roughly in those returns, and that was because of these average downs you would have done during that period there. Now, if we go to the which one is it? The bearish trades, that would have started from that period there when the CCI 1500 and confirmed by the 150 and the price, the stop loss approach and the average down going short. That was where you would have started going short during that period back there. The stop loss approach has generated so far 3,300, and the average down generated 6,025. And that's because the stop loss approach has a stop loss of 0.005% on the 1 hour time frame, but the average down doesn't stop loss that way. You only stop it when the daily breaks into that moving average range. What this does, when it breaks below the 0.005%, instead of closing it out with a stop loss, it actually averages down as long as the entry parameters are met. So here we have the Japanese Nikkei. So on the monthly, it's broken below the moving average range on the price chart. Likewise, the CCI is well below the moving averages, and that was after this bearish divergence. It broke down past our 23-38% range, and it's broken a lot lower than that. Now, on the weekly, it's been declining as well. Bearish movement on the weekly with the CCI as well as the price. Again, we had a few bearish divergences here. To be honest, we had a few of them to be aware of, and since then we've got no more bullish divergence to be worried about on the weekly or the monthly. On the daily, after hitting this resistance up here at 46.20, it's broken down and bounced off this support at 33.80, which we showed some time ago. Second time it's touched it and bounced off it. And at the moment, you'll notice the CCI is now broken above that moving average range, but the price hasn't actually quite done that. And especially the moving average band is still quite wide apart. We want to see it ideally narrow out and break above, like it did back here, for example, to be more bullish. But at the moment, the CCI 1500 is showing us predominantly bearish momentum. Now, if we go to the intraday charts, first off, let me just show you the trends. I was again taking short trades only with according to the daily. And since our last update, you can see there, similar to the Japanese Nikkei has been consolidating sideways, although at the moment, it's broken above the moving average range on the CCI as well as the price, but don't go long. You want to see this also break above, like it did back here, on both the price and the CCI 1500 and the CCI 150 to be more positive. Now, we had a bit of consolidation in there, but notice the CCI 1500 and the CCI 150 was pretty much trending sideways, and that eventually started declining. It started showing more of a decline on the 1500 at that point there. Now, if we show you the back tests, I've started the back test here from that period around about the 20th of October, around that period, after that bullish momentum, and then it started pretty much declining. Now, you'll notice here it had a bit of a drop off below the break-even point of the stop loss approach. The average down approach did quite well. So every time you always follow the daily. So whenever the daily, if you're going short, whenever the daily hits the moving average range of the CCI, you stop. You close out your positions on the 1 hour time frame, and then you go short again when the CCI and the price break below again. So had you let it go, for example, up until this point, you'll see here we had a bit of an average down, quite a big average down, and also the stop loss approach started declining, and that was because of this move to the upside. Not much difference compared to what it's been doing back here, but you want to see a bit of fluctuation in the price to close out the trades. So at that point there, for example, if I zoom in here for a moment, you would have gone short at that during that period on the daily, and you would have closed it out when it started approaching that CCI 150. And you can see there on the 1 hour time frame, that was just at the start there, just at the peak of that profitability at that point there. So that's where you would have closed out your short positions. Do not go long during that period, even though it was showing a bit of a long positioning there. You want to see, ideally, this starting to trend, the CCI 150 or 1500 also start to trend upwards, like it started doing back there. So at that point, avoid going long. You probably could have got away with 1 or 2 trades going long, but again, you don't want to risk it. Then here, again, going short once it breaks below the CCI 150. Now, again, that would have done quite nicely on both of them, and you would have stopped going, let me just zoom out a bit. You would have stopped going short at that point there when the CCI touched that moving average range on the daily. And that there, you'll see there on the right side, on both the stop loss approach and the average down approach, that was indicated by this period for both of those. You would for the stop loss approach, and approximately 89,590 for the average down approach. Now that's taking consideration that averaging down as well, which actually boosted it. So again, I could have stopped it there and restarted it there, but I'm just giving you the idea that you would have done quite nicely either way. So just be aware of those trading strategies. When you do trade this, always take note of whenever it breaks into that moving average range. So if you're new to trading, we're now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content and help me keep me motivated to keep doing these videos, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Think of it as sitting down with me over a cup of coffee. Thanks, and talk to you in our next video.